consulting, technology, you've done banking as well. And I know across Africa, banks are dealing with the fintech challenge in many different ways. We've heard about open APIs, we've heard about banks building fintech incubators of their own. We've learned about banks who have actually created separate spin-off companies to try and attempt to be fintechs themselves. I don't know from your perspective, are all these viable options or are there preferred options for our market?
What's happening is that we're all of a sudden confronted with a need to survive. And that survival push is coming from the fact that you have competition that was not there before, okay? You have competition that is nimble. You have competition that can churn out technologies that can get to your customers in a lot quicker time than you have. So we have to find a middle ground. So some of it comes with what Brett had suggested, which is partnering. Yes, we also have the baggage of legacy infrastructure that we have to deal with, but the survival need and the fact that you can't continue banking or you can't continue to grow in this current circumstance, because if we are going to go after, say, retail banking, which is where the greatest thrust will be or the greatest survival push will be, because all the other traditional banking profit areas are no longer as viable as they used to be. So if you're going to do that and you're going to scale, you have to go through digital. Now, if you're growing in a digital, if you're growing in digital, how can you do that and do that quickly when there's a market where you have companies, as Brett says, with 2 servers who can access the same customer base that you have and offer them services quickly? Now, we talk about open banking. Again, as I said, some of it is a survival thing because you're pushed, there's a regulatory push in some countries where, so like in the UK and in the EU, where between now and 2018, banks have to open up their APIs such that customers can have access, so different banks can have access to customer data and products and services. What that immediately does is it totally disintermediates what we have today. So if you're not in a position to compete in this environment, or if you're not in a position to react, then you're going to go out of business, and that's why I'm talking about survival. So when you talk about open APIs and the ability of organizations or banks to open up their products and services and client data using application programming interfaces, which are APIs, the challenge we will have in this country is whether or not the regulatory framework will allow that to happen. So in the UK, it's sort of been mandated. In the US, while they've tried it with organizations like Mint.com, there have been limitations because some banks have pushed back. Now, in the UK and in the US, in the UK and in the EU, they have to do it. So it will depend on what happens in Nigeria. Are we going to be forced to open up our APIs? Right now, what happens is the API, banks open up their data, but it's on a one-on-one relationship basis, or to organizations like NIBS. Now, the challenge with that is that the relationship is one-on-one. And so that push, when it becomes more open, how are you going to react when every bank can take your customer data and provide services that they offer, which may be cheaper than services you offer? They may also be a lot more flexible. And when you think about it, those services are also going to be offered by fintechs who have a very nimble structure and a very low-cost structure base to offer the same service very rapidly. And so what are you going to do to prepare for that? So there are a number of considerations. One, the regulatory part of it. How will the regulators handle in Nigeria open APIs and the whole concept of banking as a service? So banking as a service, leveraging open APIs. Will central bank, for example, allow banks open their APIs? And even if they do so, what will be the regulatory framework around that? There will also be security concerns around that, because obviously now who is responsible for breaches, for example? So if I have a customer service, or if I have a customer and I'm exposing that customer to services in another bank or in a fintech, and there's a breach in that fintech or in the bank that my customer now suffers from because of the openness of the API, who suffers that? So those are the considerations that would have to be put into the construction and framework of open APIs. But the thing is, because we already have some level of API sharing, at some point we will have to determine, or the industry will have to determine whether or not we will open up all APIs, because we're already doing it on an individual basis. There are already some aggregators today. I think Remita has a product that aggregates various bank accounts and offers services that they have on their platform across board. So there are a number of fintechs that are also replicating this model. So, but the limitation and the saving grace for banks today is that it's still on a one-on-one basis. But when it becomes totally open, how do we compete? So I think it would be a major disruptor. It would also be a major concern for the regulators, because if the regulatory framework is not tight enough and the legal framework that governs exposure is not tight enough, then we'll have major problems.